First of all, did you go and check out the Ice Ice Baby rendition by Marty Ray Project? Because I think if you heard it, you're gonna be like, you know, that was pretty killer. Wolf Street, Wolf Richter, wolfstreet.com. You gotta love the headlines. Retail sales picked up 1%. Well, how it's funny. How the hell did retail sales pick up when everyone else is firing everybody? Letting go, closing down, bankruptcy, chapter 11, chapter 11, chapter 11, chapter. How many videos have I done this year? My goodness. On that stuff. Holy crap. What the headlines got wrong about retail sales. No, our American consumers did not suddenly perform a miracle. Oh, gosh, I thought we got out of this rut, you know, gosh. As part of the data dump on Friday, the Commerce Department released its estimates for retail sales for September. If you just looked at the headlines, you'd get the impression that our American consumers suddenly had gone out to splurge, fired up by two powerful, destructive, and deadly hurricanes. U.S. retail surge, driven by autos and gasoline purchases, Reuters says. Retail sales in September surged most in 2 years, Los Angeles Times. Storm surge and U.S. retail sales surge most in 2.5 years, New York Times. U.S. retail sales rose 1.6% in September. Strong car sales and higher gasoline prices power largest one-month increase since March 2015, Wall Street Journal. U.S. retail sales rise most since 2015 on storm-related lift. Bloomberg News. So U.S. consumers performed one of their infamous last-minute miracles and suddenly got on the internet and drove to the mall and to auto dealers and splurged? The headlines pointed at the hurricanes and replacement demand, but this is what you get into when the headlines draw big conclusions from seasonally adjusted month-to-month data that is trying to estimate a very seasonal and volatile reality. Which means what? Get ready for me to come out in about 1 to 2 months and say, hey guys, ooh, double revision. They're screwing my eyes with that double revision. Because they're going to revise the living hell out of it. Okay? So, it says, what are these glowing headlines talking about? Retail sales rose 1.6% in September from August. That's a big one-month surge, the largest since March 2015. And it appeared after retail sales in August had edged down 0.1% from July. But these sales figures are based on data that has been adjusted for seasonal variation and holiday and trading day differences, but not for price changes, as the Commerce Department says. So in short, this is seasonally adjusted, month-to-month data based on a hope and a prayer. We think this is it, so this is it. Here you go. Remember, they revised 10 years of GDP as Obama was stepping out of office right before he left. We're revising 10 years of GDP, and it didn't go up anywhere. It went down every year. Okay? So they held that off for 10 years. I'm telling you, get ready in a month or two to hear that this is adjusted, you know, revised down. Then again, maybe they'll hang on to it for 10 years. Who will remember by then? So what happened really? Not adjusted for seasonal and calendar differences, retail sales actually dropped by $23.4 billion, or 4.8% from August, to $468.2 billion. Why? Because unadjusted retail sales always drop in September. August is part of back-to-school selling season. For example, in September 2016, retail sales dropped 4.9% from their prior month, so this September was right in line with this 4.8% drop. And the peak month is always December. Last December, retail sales hit $542.1 billion. It will take another December to take out that record. This chart shows monthly, I'll go ahead and pull it up in case you want to see it. Shows monthly, not seasonally adjusted retail sales in billions of dollars. Note the spike during the November-December holiday selling season and the plunge in January and February. These vast fluctuations due to predictable seasonality make this chart difficult to read, especially for month-to-month observations. There is a lot of noise in it, so the Commerce Department adjusts this data to smoothen out the seasonal variations. Seasonally adjusted data is only as good as the seasonal adjustments. So how strong are the seasonal month-to-month variations that have to be adjusted out of it? They're actually huge, which I'll show you. This chart looks like my electrocardiogram when I get angry about the latest price increases, but it's just the month-to-month percent change of humdrum retail sales. That is a pretty massive movement, if I don't mind saying so. The range is from a month-to-month surge of 20% to a plunge of 20% without anything drastic happening. These huge month-to-month variations require huge seasonal adjustments to smoothen them out. Any small error in estimating the needed adjustments make the seasonally adjusted month-to-month data useless. So rather than get tangled up in the seasonal variations and adjustments, we can look at year-over-year changes in unadjusted retail sales, for example, from September 2017 to September 2016. This mostly eliminates seasonal fluctuations, though trade dating differences remain. Though trading day differences remain. But with the 24/7 internet grabbing an ever larger share, and with long store hours on weekends, trading day differences are declining in importance. The chart below, which I don't think I need to show this one, takes down the adrenaline level by a few measures. It shows the year-over-year percentage change of retail sales. In September, retail sales rose 4.1% from September in 2016. This was in the normal range since the financial crisis. It was better than in August, and it was the fastest growth in, 4 months. But price increases caused much of that. This 4.1% is decent growth, but it's nominal growth, meaning that price changes are not figured into this. Consumer prices, as measured by the Consumer Price Index, released today, which was a couple days ago, have surged 2.2% year over year in September. So on an inflation-adjusted basis, real retail sales, I'm just ballparking here because CPI is based on total consumer spending, including things like rent that are not part of retail sales, would be up about 1.9% from a year ago. So there's not much to gush about in the headlines. It fits right in with the same languid growth rate that the economy has seen since the financial crisis of around 2%, plus or minus a little in real terms. Last year, the economy grew a lousier than usual 1.8%. This year, the economy will likely grow a little above 2%, right on track to do absolutely nothing special. And retail sales in September were smack dab in the middle of it. What's boiling beneath the surging inflation? Read, Yellen was right. Transitory factors of low inflation are reversing, with much more to come. And that's, of course, Wall Street, wallstreet.com. So I just try to look back. Been doing these videos for quite a long time, years. And it does amaze me how, and this seems like any government on the face of the earth, to be honest with you, but for us, we care mostly about America, since 90-something% of my subscribers are from America. We don't like being lied to. We want the truth. Just tell us the truth. Oh, unemployment's at, it's down to 3.8 or whatever hell it's, I don't even know, 4.3. In fact, I could probably look that up real quick. Unemployment rate fell. This is from fake news CNBC. Let's go for it. Let's do it live. Now this was from April 2017, but the government reported a 4.5% unemployment rate. But here's the realistic number. Oh. Each month on Jobs Friday, the Bureau of Labor Statistics releases a ton of economic data. Whatever. So anyways, 6 measures of unemployment. Bottom line, 4.3%, 4.5%, whatever, is complete hogwash. You know this. We wouldn't have 40-something million people on food stamps if it wasn't hogwash. We wouldn't be spending money out of control at the federal government. Another $1 trillion tacked on last year. Another $1 trillion will be tacked on this year. Another $1 trillion, 20 trillion national debt, 21 trillion, 22, which is going to keep going. But we got great unemployment numbers. So if the great unemployment numbers are down so much, that means more tax revenue should be coming in. And we should be having these $1 trillion per year being added to the deficit. Nah, we don't want to look at statistics like that, 4.5%. This is unbelievable. Everything is based off of something else that's based off of something else. And we've got to take seasonally adjusted and revision and double revision. And like I said, they kept 10 years of GDP. That's the entire nation's gross domestic product. 10 years straight. The numbers weren't great. And then they had to revise them lower. 1 point something percent that year, 2% that year, another 1 point something percent. I mean, crap. Complete crap GDP. But it's all about fluff. Give the people the fluff, lie to them, make them feel good, tell them everything's great. And last but not least, we do all of this so that you go out and consume. We need you to consume. But I can't consume. My rent is astronomically high. I can't consume. My mortgage is astronomically high. I can't consume. I've got an 8-year loan on my car that I've been paying 6 years on, and I'm tired of this thing. I'm ready to dump it in the freaking river. I need a new car. But you owe 2 years on it. Well, I could go get a new car, and they'll tack on what I owe to the new car. But then I'd still get an 8-year loan, and my payments would be higher than... Long story short, ain't got no money to consume. So what else can we do? We'll just come out with fake numbers and tell everybody everything's fine. Take care.